Good morning and welcome to Equity Story, Thursday, the 24th of November. I'm on my own today. Dave is at AGM, so bear with me, please. But we'll get on with, because I've got a bolter for you today of a story that's delivered some interesting news today. But from last night, just quickly go through, before I do that, let me just quickly go through Equity Story. Disclaimer, and in front of you is the usual general advice warning that pretty much everything I talk about today is going to be a general in nature only. So stocks wise, I'm talking about the fundamentals and technicals only. All right. So last night, first of all, we had the Dow and the Nasdaq doing actually okay. The Nasdaq was stronger than the Dow, which is nice because the Nasdaq has been actually lagging behind the Dow Jones. So from that point of view, nice to see that. Hopefully, we'll carry on through today on our markets and seeing some of these lagging tech stocks recover somewhat. But we'll see that there is some actually still good stories that are pretty cheap for me in the tech space. So I'm still looking at them, still looking obviously to buy some bargains or maybe just look at some nibbling on some opportunities. We talked about them before, but still the main thing here is looking for value. And have I got something for you right now? So let's go into, and I'll just quickly change the screen and I'll show you what story I've got for you right now. So CTI Logistics, CXL, I think. No, CLX, sorry. CLX is the code. So they've come out today, as you can see in front of you, they've come up with an trading update today. So advisor profit before tax for the half year to 31st of December is expected to exceed profit before tax, approximately 60%. The result has been driven by stronger revenue growth from existing companies, as well as strong focus on cost control. And that's the key here. So obviously a pretty strong result, right? 60% is very, very, very good on the back of that. They're basically, in the context, they're talking about the increasing inflation interest rates. However, they're doing a very, very good job at mitigating the issues with inflation. So from that point of view, it looks very, very good, right? But probably the exciting stuff is, apart from the 60% better than last year, is the chart. So I'll go to the chart. Actually, first of all, before I go to the chart, I'll go to the fundamentals, because the two are very, 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 very good. So you've got P of 6.5, pretty cheap, right? From you can see a dividend yield of 7%. Yes, thank you very much. I'll take them both if they can deliver that sort of result. But look at the chart. The chart is an absolute perler, and this is why you're probably buying it. Well, hopefully it stays like that by Friday, of course. But if the chart stays like this is unbelievable. It's one of the best charts you want to see. And I'll show you that right now. And you can see, look at that. That is just absolutely beautiful. Swinging around, hitting all-time highs, I believe. So off it goes on a cheap price like that. That's going. So hopefully it should stay like on this result. It should stay like that by Friday. So you can maybe think about it buying today. Bugger it, buy it today. It looks good. It should go on with it. And you've got a story here. And this is sort of similar in a way, CTI Logistics, similar to Lindsay as well, the transport logistics as well. And that's also going quite well. So, you've got stories in this space that are doing pretty good. So, I'm confident that they can maybe have another pretty good run over the next 6 to 12 months on the back of that, because they are cheap anyway. So you're not overspending on this sort of thing. So there's a protection a little bit on the side of the downside, and hopefully the market sort of picks it up even further. It should really go on with it because it is really inexpensive, good dividend deal. So you've got extra bits in there for you to grab onto. So that's why it looks pretty good. But I'm just going to quickly put in Lindsay so you can have a look at that as well, because another story that we're actually trending and playing with. It's sort of sliding off, but it's still looking pretty good. As you can see, that chart is still very, very good. So if you're in this, you bought it maybe on this candle, it looks very similar to actually CLX. It's still hold. It's still a hold. It still looks pretty good. So Lindsay, CLX, excellent. But CLX today, it just looks superb. So go for it. Let's go to the next story. And the next story I've got for you is STG. Probably not as good. Well, it is definitely not as good as CLX on charts, but the results today, or an update today, was pretty good. From the point of fact that it's languishing, it probably should not be languishing as much as it is. I think the results were better than the share price indicates. However, it's starting to pick up, as you can see. It might, get over that 130, 38, 140. Once it gets through that, you possibly can see it go on with it. But for the moment, we're not touching it. It's a story that we've got on our watch list for a trade here and there. Right now, the fundamentals are starting to push this along, and possibly maybe in the next 6 months, we might see a nice trade coming up, maybe for 140 to 160, 170, somewhere around there. But just be patient with that one. Let's go to the next one, QUB. Another one with an update today on the AGMs. The AGMs are coming through thick and fast at the moment, so just be wary of the stocks you might be trading because they look pretty, some of them move the markets quite heavily. So QUB for us right now, good story. I like it as defensive. Infrastructure is always popular. It's one of those stories that possibly will be a very good story for long term. However, you're not going to get too much excitement out of it. It's probably going to be a slow burn type story over the next few years, right? However, infrastructure is always in demand because it's got that long-term viability, predictability, and for the big pension funds out there, they love that sort of stuff. So watch the space, of course, with QUB. But for me, it's too expensive at the moment still. However, I do like story. They updated quite well. So again, another one that's just keep it on your watch list. There might be a trade once it gets over that 290, push it up to maybe 310, 320, 330 maybe. But right now, positive update. Interested but not interested as a trade. However, it's still on the watch list. Next one, Kogan. There's a bit of light coming through. So the problem for Kogan was they overbought inventory during pandemic. They thought it's probably going to longer for stronger. It didn't actually happen like that. Then they had obviously cost problems, inflation issues, all those sort of things come back to bite them on the ass. It came back pretty strongly. You can see the chart's not fantastic. However, there's definitely some green shoots coming through. So the inventory is starting to go down, which means costs are improving. So there's a little bit of hope possibly for Kogan. Would I jump in now? No, I wouldn't. But I'm definitely watching this one because it could be one of those that could recover quite strongly and move on, say, from 440 maybe to something like $697. So there could be a pretty good trade in this. It's just too early for me. I think right now, just given nothing, when they updated today, while there's green shoots in there, they still said it's there's still weakish type revenue coming through. But they're working through that, and of course it will probably hopefully change for them in the coming months. One to watch, a little bit early, but the chart's getting better and better. So we just got to wait for it. Even maybe if it gets over that 450, that's when we're looking at it. So it's not too far away. Next one, RIC, which another one we've been trading quite successfully. It's an agri space, updated fairly well. It had that big sell-off here. Probably like an Elders type stuff. I think it's just been overdone. People are very nervous about the agri space. I'm nervous to a point, but not nervous where it's going to collapse in a heap. I think it will have its moments. The floods, the droughts, the fires. You just got to accept them. They're going to happen. So you're going to have a bit of volatility. You're going to have a bit of red candles on a weekly or maybe on a monthly type stuff. But generally speaking, the company keeps executing well on the strategy in a good space. I think agriculture is a good space because the populations are growing. There's demand for food. There's all that positivity behind it. There's tailwinds behind it, long-term tailwinds behind it. So I'm positive on it. You just have to find the right story to play with. Elders for me is still pretty good, and I'll show you the chart in a sec again. Obviously doesn't look great, but I'll show you the chart again. But this doesn't look too bad. So yes, it's dropped below that red line, but I suppose when you're in this for the long term, it's not the end of the world. We've seen that it can happen. It does drop below the red line, but it sort of holds more the black line. That's what you're more maybe worried about. So if you're long termer, you hold on. If you're a short term trader, yes, okay, I understand. You're out, right? You've made your profit maybe from here to there. Maybe you would have sold out on this one, but you definitely would have sold out on this red candle, right, for a trade. It's starting to maybe look a little bit better. The update was, okay, nothing really net to get scared about. So it might start working itself back up again over that $2 again. And there might be another trade back to 220, which is another 10%. All right, let's go to the next one. And that's the last one I've got for you today. and that's EGL. Now, very interesting little company, EGL. It is in the environment space, you can call it. What I like about it, I'll go to the numbers here because this is probably quite an interesting part. You can see the chart is, before I go into that, the fundamentals, the chart is actually not too bad. It just needs to do a little bit more, maybe up to 22 cents, and then maybe you can have a trade up to 28 or 25 or 26, somewhere around there anyway. But today's result was actually very promising. So let's go to and show you what I mean by EGL's results today. Because again, it looks like an upgrade for me, and I love upgrades. And if it's in the right space, right, it potentially could see that upside over the next few weeks. So if I put this up for you right now, so just give me 1 sec, get this out here. Whoops. Come on. Here we go. So EGL, Environmental Group Update, FY23 trading update. So they basically talked about it in the 25th of August that EBITDA was expected to increase by over 25% year on year. However, they said since that time, the performance across the business has been strong and has exceeded initial expectations, in particular on the back of a solid growth in FY20, the total air pollution control, which is a nice environmental business, is expected to again have strong growth in FY23, well ahead of budget. So, basically talking about this total air pollution control has proven itself to be a leader in designing emission systems for specialist plants to refine minerals for the renewable energy sector. I like this space, right? So what they're talking about is now going to increase the EBITDA. It's going to increase 35%. So that's another 10% on top of the 25. That's excellent, right? For me, it's probably still going to be, at the bottom line, profitability probably going to be even to maybe slight profit to maybe slight loss, somewhere around there. But it should be cash flow positive. And overall, it's a business on the up. And they've got a partnership with in Victoria. So all up, I think this is looking fairly good for me, right? So I'm a positive dude on this company, and I think if it starts trending again, you need to it's lightly traded, but you probably need to have a little play with this because, like I said, it's got a lot. I can see a long-term potential with this growing its business through that potential TAPC plus its other business units that they've got in there. It's going to be lumpy. Yes, it's lightly traded, so it's going to be high risk. But if you can set yourself around that, 20, 21, 22 cents, maybe for the medium term, there could be some, if they obviously execute, there could be some possible good gains to be had from this story. So another interesting little story. I definitely prefer this CTI today. That was crazy. And the chart looks absolutely sensational. But this one is another one that you've got to have your watch list and just watch it carefully. Now, I'm going to go back again to the charting because I did promise you to show you what Elders looks like, because we talked about it. Now it's going to turn into a little dividend play, right? So for me, Elders is still very, very good. You can see that EGL chart again, but let's go to Elders and I'll show you that chart just to reiterate what we talked about it from yesterday. And you can see it's not looking great. Now, we talked about $10 probably there. If you're going by dividends, you're probably looking at $10 as your last stop, possibly. Hopefully, it'll hold that. So from the point of view as a dividend play, you're okay in there. Medium term, I don't see any issues in there. We talked about that the big issue, that's what brought the share price down so hard, was the change in CEO. So it happens, unfortunately, but we got to hold on if we're in the dividends now and play it like that. Otherwise, if you're a trader, you've got to be out, of course. If you're long-termer, you just probably want to wait till tomorrow and just reassess. And we'll probably talk about it again tomorrow to see where we're at with Elders and see what we do. But overall, yeah, it's unfortunate, I have to say. So, it's a good story that's been just got smacked because of that CEO uncertainty. And markets just don't like that. Just the last thing I want to mention, I'm just looking through the actual commodity prices on trading economics. So if you are, I suppose, trading all these little stocks, look at trading economics, because it will help you to see how things are tracking the underlying things like the commodity prices for your stock, for example. So I'm just looking at gold. Gold's looking okay slightly down this week, but still looking okay. So I'm still positive on Mika. I'm looking at now main. I'm looking at main metal. So I'm looking at lead this week down 6.5%, tin down 4%. So across the board, I think the biggest one that's been hit this week is nickel down 14%. That's why it's, you know, possibly this week hasn't been great for the commodity players. But overall, again, you know, when you look at where commodities are heading, I think they are heading possibly down on the back of economies slowing down with the interest rate rises. So just be wary of that when trading any of these little small stocks. But that's just the longer term headwinds we're getting at the moment, right? Short term, if you're trading on a short term basis, like the WA1s of the world and some others, you know, you can trade in and out on a daily basis with no problems on that side. All right, so I think I've covered pretty much everything I needed to do today. I'm still positive longer term on gold, so that's why Mika is good. I gave you the CTI, CLX. Let's have a look at that again today, because that was an absolute pearl of a chart. So you're buying that today. And yeah, overall, I think we got a nice little buy. We're looking at EGL, and hopefully tomorrow will be okayish day where this will be confirmed and will lead on to the next week. We're getting closer to December and Christmas. All right, guys, thank you so much for joining me today. I'll probably be back with Dave tomorrow, and we've got the ATA tomorrow. Have a great one. See ya.